Hi, this is Atmir with the US Chartbreakers here at Zach's Traders Cafe for Monday, the 3rd of April. Starting off with the S&P 500, which has cleared the initial March resistance on the first trading session of April, which is normally a good sign. We've got a rising 50 and 200-day moving averages. We've broken a February resistance line. RSI just around the 60 level, so not overbought. So everything to play for here while we're above the 480 zone. Initial target here, obviously, the February resistance zone towards 4,200. Best case scenario, maybe by the end of next month, up to 4,320, if everything goes as it should, given the positives on the daily chart. Only back below 40.30, and the 50-day line really turning this market negative and requiring a test of the 200-day line towards 39.35. But at this stage, ideally, we stay above 40.80, and we don't even have to test the 50-day line at 40.25. On to the stocks, and quite a few unheard of ones, or relatively obscure ones, let's say, being more polite. Here we've got GSI Technology, broken a line of resistance there on Friday from January around $1.50. Also broken just cleared the 50-day moving average at $1.70, and above that we're looking for $2.50. At the 200-day moving average. That's the top of a broadening triangle from December. Next situation is Iveric Bio, and here we've got a nice rising trend channel there from back in September. It's always good, the sort of slow burn situations. The rally started off with an unfilled gap to the upside. That's normally a good sign, and you tend to be a buyer of the gap up day, which in this case would have been around $15.60. And if you look at it, we've hardly ever been below. We're really temporarily below that level since then. Current situation, another gap higher, following a gap higher at the beginning of the month, last month. So this is a good start to the month, gapping up on the first session. Top of the channel there at 33.60. And really, while we're above the resistance before the breakout around 24.80, we're looking for 32 or 33 dollars plus over the next 4 weeks or so. Moving along to a stock which gets some coverage here occasionally, Marathon Oil, and obviously doing well in the wake of the OPEC moves. Here we've got, we had a double gap, double island reversal, so double gaps down, and then so far now a double gap to the upside. That suggests that at least while we're above the support area of Friday at $24, we could head up to the top of the broadening triangle from December as high as $30.50. If you're more squeamish, you'd probably use an end-of-day close back below the 50-day moving average at $25.27 as the stop loss. That was also support on the way down back in February and the beginning of March. Nightmare scenarios that we just go straight back and test the $24 area without any further rally. Moving on to a stock which is also looking sprightly today. Here we've got Nogin. The reason of the interest here on a charting basis is the bullish divergence. So we've had what looks like a bear trap from below the initial, or the former 2022 support zone. So that was around $8.40, and trying to recover at the moment. Want to see basically an end of day close back above the 50-day moving average just to feel safe, but the longer we stay above the $7 level and the early March support area, the greater the chance of a move up to $20 maybe by the end of next month. But it's all about believing in that bullish divergence that we have there. Stock coming up next, which has a decent look to it, Ocuphire Pharma, and here we've got a rising trend channel from back in August. Broken through recent resistance at the 4th or 5th attempt, so the resistance area around $3.80. Above that, we're looking for as high as $5.40 at the top of the 2022 trend channel. You can see that long resistance line has been broken there from back in March last year. So above $3.80, looking for $5 plus on Ocuphire Pharma. Next stock is one that is probably known to most people, Occidental Petroleum, another winner on the OPEC side. Plenty of stocks in that sort of boat. Here we had a sort of double bear traps over the course of March, and gapped up ahead of this week's jump. So second gap higher in a row. Looking for the $70 area, which is the top of that broadening triangle from back in October. That resistance line, though, from November. So $70, at least while we hold above the 50-day moving average, around $61.70. Next situation is one which has had a lot of coverage here over the last few days, and Pyxis again. The good news here was that the shares managed to hit our initial target there towards $6. In fact, it overshot a little bit, but situation now is they're just trying to see how far the shares will come back. You can see that they bounced basically on or near the March support on the way down, around the $3.50 area. Above $3.50, looking for a retest of $6 plus. Best case scenario is an end of day close leads to above $6 leads to $8.50 by the end of next month. Decent looking situation now coming in Procept. Here you can see that we bounced outside or gapped through a falling wedge. We've got bullish divergence as well, which gives the added momentum or belief in that momentum will come in here. Above the floor of the gap there at $28.50, looking for as high as $40. Ideally, there's no break back below today's intraday low at $28.80 on an end of day close basis, ahead of $40, perhaps as soon as the end of this month. But the bear trap gap reversal and the bullish divergence should hopefully get Procept going north. Moving on to Transocean, and here we've got this rising pattern, sort of almost like a broadening triangle, but you could argue it's just a rising trend channel if I draw that more in parallel, but basically gapping through the 50-day moving average. Above the support on Friday, around $6.30. We're looking for as high as $9 by the end of the month, backed by the rising 50 and 200-day moving averages and the latest RSI bounce off neutral 50, which tends to be a decent continuation signal. In fact, if you look at the gap down that we've also had an island reversal as well to add to the excitement on the technical front. Moving on to Teck resources, and here we've had a beautiful gap higher through the 50-day moving average. That's a reasonable stop loss now, around the 39.50 level. Above that, we're looking for the top of the rising trend channel from as long ago as this time last year, or in fact March last year. That's heading towards $55. So basically above the 50-day line, looking for that kind of level by the end of next month. Ideally, we stay above the $40 handle in the meantime. Just a couple of stocks to go now. First one is US Energy, and here obviously a good day to be involved in this particular area of the market. You can see there's been a broadening triangle on the daily chart since back in December, and if we hone in on it, you can see that at the moment the shares have gapped up after a bear trap from below the initial March support area around $1.90. Above that, we're looking for $3 as soon as the end of this month, with a bear trap rebound and also bullish divergence coming in with the lower lows during March, but a much higher RSI line. So that actually was flagging to us that the shares were ready to jump. Last stock of the day is one that is also looking as though it is ready to jump and keep on jumping. That's set on the basis of the bullish divergence line, so lower lows for March versus December, but a higher RSI line, and Virtra above its 50-day moving average at $4.40. Above that, we're looking for $5.50 well before the end of this month. The ideal scenario is that there is no weakness below that 50-day line ahead of a move to $5.50 and perhaps much more. That's it from me today. More updates tomorrow.